Oil lingered near $51/barrel as OPEC's optimistic outlook for crude demand was overshadowed by the specter of booming output from Texas to Tripoli. Futures meandered within a narrow 66-cent range after jumping the most in 2 weeks on Tuesday. Daily demand for OPEC crude next year will be about 200,000 barrels higher than the Organization of Petroleum exporting countries predicted just a month ago. In addition, output caps adopted by most OPEC nations and allied producers are trimming a worldwide glut, the group said on Wednesday. Some investors remain skeptical that the surfeit of oil is shrinking as much as OPEC claims. There's still a lot of questions around what 2018 is shaping up to be like in terms of demand and supply. OPEC continues to keep working this market over with their rhetoric, even though the supply dynamic doesn't seem to be supporting their positions. Oil has advanced more than 3% this week on speculation OPEC, Russia and other parties to the historic 2016 production accord may extend the deal beyond its March expiration. Saudi Arabia warned it will cut the amount of crude available for sale next month, while OPEC Secretary-General Mohammad Barkindo signaled the group is looking to expand the number of nations participating in the deal. West Texas Intermediate for November delivery was unchanged at $50.92/barrel at 10:36 a.m. on the New York Mercantile Exchange. Total volume traded was about 7% below the 100-a-day average. Brent for December settlement slid 14 cents to $56.47 on the London-based ICE Futures Europe exchange. The global benchmark crude traded at a premium of $5.29 to December West Texas Intermediate. The gasoline crack spread, a rough measure of the profit from refining crude into gasoline, jumped as much as 4.4% to $16.62/barrel. Delta Airlines Incorporated single-quote S refinery in Pennsylvania was said to be shutting some units down after a fire on Wednesday, according to a person familiar with operations. OPEC will need to supply 33.1 million barrels of oil per day next year, about 350,000 more than it pumped last month, the group said in a report on Wednesday. A Bloomberg survey showed that U.S. distillate stockpiles probably declined by 1.93 million last week. At the Cushing, Oklahoma, pipeline hub, inventories likely increased by 1.8 million barrels, according to a separate forecast compiled by Bloomberg. The industry-funded American Petroleum Institute will release its inventory data on Wednesday, while the Energy Information Administration is scheduled to disclose its tallies on Thursday. Oil market news. Pierre and Durand's hedge fund trailed the oil price rally last month, posting a 2.4% gain compared with the almost 10% boost for Brent crude, according to people familiar with the performance. Canadian oil sands producers enjoying the strongest market for heavy crude since 2008 will soon face a renewed glut. Suncor Energy Incorporated expects its Fort Hills oil sands mine to begin producing by year-end. The startup will roughly coincide with the completion of planned maintenance at the Keel mine owned by ExxonMobil Corporation's Imperial Oil subsidiary. To get faster updates and the latest news from the oil and gas industry, please subscribe to the YouTube new video channel and connect with us on Facebook, Twitter or LinkedIn.